Imagine if Bitcoin crashes soon, what happens then? That's the question many people are asking themselves, especially now that Larry Fink from BlackRock and Michael Saylor from MicroStrategy are relentlessly buying Bitcoin. And that's exactly what I'm going to talk to you about in this video. I'll also discuss Cathy Wood's wild price prediction, which could come true very soon, and the Genius Act, what it means for Bitcoin and for the altcoin. So let's get started now, go through everything, and begin with Cathy Wood. Then we'll talk about the Bitcoin crash, what you should prepare for, what you need to know, and how you can find out when it might happen. And then we'll also discuss what's coming next and what you should be getting ready for. In an interview, Cathy Wood is asked whether her bullish price prediction for Bitcoin of over $1 million could now be reached more quickly. Cathy Wood then confirms that this prediction of $1 million per Bitcoin was made before the ETF approval by the US Securities and Exchange Commission, and that the timeline has now been shortened as a result. She emphasizes that major financial institutions like Morgan Stanley or Merrill Lynch have not yet approved Bitcoin, meaning that the price increase so far has happened without their involvement, and that this makes the potential even greater. According to her, the price target for Bitcoin is over $1 million by 2030.
Her price target for Bitcoin, in the bull scenario, is over $1 million. So if you had this bull scenario for Bitcoin at more than $1 million, has your forecast period for reaching that price now shortened?
Yes, that target was, we developed it it was before the SEC gave us the green light. And I think that was a major milestone and has moved the timeline forward. There's one thing I'd like to say. At the moment, no major bank. So whether we're talking about Morgan Stanley or Merrill Lynch, Bank of America or UBS or Wells Fargo, no platform has approved Bitcoin so far. So all of these price movements have happened before they've approved it. And, we haven't even started yet.
So what is your current time frame for Bitcoin reaching $1 million? And is there perhaps now a price target beyond that?
Yes, our target is above that. We have a target for the year 2030. So it's significantly above that. And with our new expectations for institutional involvement, the additional price that we assume for institutions has actually more than doubled.
Totally crazy what Cathy Wood just said. But to understand Bitcoin, you also need to understand the following. Bitcoin operates in cycles, and these cycles are often linked to the Bitcoin halving, which takes place every 4 years. The halving cuts the reward for Bitcoin miners in half, which increases the scarcity of new Bitcoins and has historically led to price increases. And in previous cycles like 2013, 2017, and 2021, Bitcoin has always experienced a strong upswing, followed by a peak and then a crash, during which the price sometimes dropped by as much as 80% or more. And now, many are wondering whether this will happen again in this cycle, especially since Bitcoin recently reached new all-time highs and everyone was totally euphoric. But I'm telling you, it's important not to panic, but to understand the signs and learn when the whole thing is coming. The current cycle is different because various factors are influencing it. For example, the introduction of Bitcoin ETFs, which make it easier for institutional investors to invest in Bitcoin without having to hold the coins directly. This has led to a massive inflow of capital, which of course is also driving up the price. And in recent months, billions of dollars have flowed into these ETFs, which has made the market more stable than in the past. For example, when the price was mainly driven by retail investors. But I'm also warning you now, euphoria is a sign of an approaching top, which we may have already seen now. That means, when everyone is talking about Bitcoin, social media posts are exploding, and even people who have nothing to do with crypto or don't understand crypto want to invest, then that could be a warning sign. Maybe you remember 2017 when Bitcoin rose to $20,000 and then crashed? Exactly, that could happen again. And when observing the market, there are some metrics you should definitely pay attention to. One of them is the realized price, which essentially represents the average purchase price of all Bitcoins. And if the current price is far above that, it could indicate overvaluation. Another metric is the MVRV ratio, market value to realized value ratio, which compares the market price to the realized value, and historically, a high MVRV has signaled a top. And also take a look at on-chain data, such as the amount of Bitcoin on exchanges. If a lot of Bitcoin is being withdrawn from exchanges, it shows hodling behavior and could naturally support the price as a result. Conversely, if miners or long-term holders want to sell, they can of course create selling pressure. And we need to be aware that in this cycle, adoption by states and companies like El Salvador, MicroStrategy, and BlackRock brings a new dynamic, and these players do not sell easily, which could soften a crash. And we also need to know that macroeconomic factors play a role here as well. The US central bank and its interest rate decisions naturally also influence the market. When interest rates are lowered, more money flows into riskier assets like Bitcoin, for example. But in times of inflation or fears of recession, that could of course reverse. Think of the US debt crisis, for example. And Bitcoin is seen as a hedge against fiat currencies. That's why the price could go higher in this cycle, maybe even rise to $150,000 per Bitcoin or even more without crashing immediately. But of course, nothing is guaranteed. And to know whether you should be worried, pay attention to volatility. Sharp fluctuations like 10% days are normal, but if the price falls for weeks and breaks support levels, that could indicate a crash. But first, we've just seen the introduction of the Genius Act in the US, a law concerning stablecoins. And according to Jack Mallers, this could turn out to be positive for crypto and, of course, for Bitcoin as well. Because stablecoins like Tether are closely correlated with Bitcoin. The basic fact is this. The US would have to devalue the dollar in order to manage its debt. Stablecoins essentially create demand for US government bonds since no one else wants to buy them. And of course, because stablecoins are available worldwide.
Here's what I think matters for us Bitcoiners. In green, what you're looking at is Tether, market cap. And in orange, what you're looking at is Bitcoin. Why is this interesting? The currency pair that does the most volume against this asset class is USDT, is Tether. If you guys can see, they're fairly correlated. If you want stablecoins to grow, Bitcoin grows. You want to debase the dollar against something, Bitcoin. We know that the US cannot raise rates and they cannot cut spending. So we are trapped. The next logical step is we then need to devalue the dollar. It's the only way out. And that's what I've been saying on this show over and over and over and over again. We have to print. However, debase the dollar against what? I'll tell you what's a really bad idea. Do not debase the dollar against housing. Bad idea. Because if housing starts to rip 60% year over year, that's bad. A lot of people are going to be really pissed because they don't want to be homeless. My recommendation, debase it against Bitcoin and gold. That's the stablecoin idea. The United States sends Bitcoin to $500,000 a coin. If Bitcoin grows, Tether has to grow. That's 5 times from here. Stablecoins then have to grow 5-fold. That's 5 times the amount of demand for US debt. China doesn't want your debt. Civilians don't want your debt. Russia doesn't want your debt. Banks don't want your debt. Hedge funds don't want your debt. Who is the buyer of last resort? The Fed, T-bills, the things that stablecoins buy. We can't have debt to GDP at 130%. That number has to come down. It comes down through printing money, through debasing the dollar. You can debase the dollar against gold, against Bitcoin. I'm telling you, that's it. I'm telling you, I feel it in my bones. I really do. The president and his family just bought $2 trillion worth of Bitcoin. Next, Trump opens the US retirement market to crypto investments. How do you debase the dollar and still get reelected? Put Bitcoin and gold into everyone's retirement accounts and send the check. And when I say send, I don't mean Bitcoin to 1 million. I mean the dollar to fucking 0. Do you want to know what you call a person who doesn't go crazy when the dollar is debased?
Historically, the US central bank has massively expanded the monetary system during times of war to finance debt, and Jack Mallers sees Trump's Bitcoin purchases and the opening of retirement accounts to cryptocurrencies as a way to devalue the dollar without angering voters. According to Jack Mallers, Bitcoin holders are not affected by this as they benefit from the increase in value and stablecoins grow alongside Bitcoin, thereby helping to stabilize the financial system. And now a few tips for you as an investor. Don't invest everything at once, but use the cost averaging effect, meaning buy smaller amounts regularly. This way you minimize the risk of buying at the top. And here's another important point. Self-custody is extremely important. Use wallets instead of leaving your Bitcoin or cryptocurrencies on exchanges to protect yourself from hacks. If you want to learn more about this, click the link in the description below the video and get yourself an offline wallet. Even when there was a crash, like in 2022 when it dropped from $69,000 to $16,000 per Bitcoin, Bitcoin has always come back stronger than before. After the 2018 crash, it reached new highs in 2021. This is due to the network effect and growing adoption. Bitcoin's Lightning Network makes transactions faster and cheaper, making Bitcoin more attractive for everyday payments. Psychologically, many people panic sell when the price drops and buy out of greed when it rises. And that's the reason for these cycles. Think long-term here, at least 4 years since that's the Bitcoin halving cycle. Bitcoin is more than just speculation, as it is already integrated into real economic systems where it is accepted as a currency. And that shows that it's more than just speculation and could extend the cycle. And possible scenarios for this cycle: in the best case, Bitcoin reaches a top at $150,000 per Bitcoin or more and only corrects by 30% before continuing upward. In the worst case, we crash like in 2022. And to determine whether you need to be concerned, look at the RSI indicator. An RSI above 70 indicates overbought, below 30 indicates oversold. And currently, the RSI is high but not extreme. And Google Trends for Bitcoin shows spikes at the tops, and when search queries explode, that could basically also signal the end of the bull market, and in any case, global factors can also play a role. For example, China banning Bitcoin mining, Europe and the US regulating crypto, or Trump's pro-Bitcoin stance boosting or influencing the market. Stablecoins like Tether export the dollar and create demand for US debt, which supports the dollar but positions Bitcoin as an alternative. And for beginners, download a wallet. Buy Bitcoin and store your Bitcoin securely offline. You can find the link for that in the description below the video. Education is also important. Read books, and if you want to learn more about Bitcoin and cryptocurrencies, you'll also find the link for that in the description below the video. And a top and crash are possible, but not necessarily as dramatic as in the past. So keep an eye on metrics and think long term. Bitcoin wins in the long run, as we have seen time and again. Because it is scarce, decentralized money, stay calm and hodl.